Alright guys, welcome back to another video. This is the Dividend Doggo channel here on YouTube. This channel is all about collecting dividends, purchasing stocks, and investing. Gonna dabble in a little bit of the real estate stuff that I've done in the future, but for right now we're just going to be doing a weekly update. This week was kind of an interesting week. It was up and down. A lot of stocks were yo-yoing around, but uh, ultimately, as you can see, the week was up about $4,300, and the portfolio was up almost $9,000 as a total. That is because of dividends earned and some buys this week. So I'm going to jump straight into the buys, and then we'll look over the portfolio and how it was for the whole week in just a moment. All right, so this is what the buys were. As you can see here, we had some dividends go in. We had a little trade. I think I talked about this last week, but I did a little trade of Lockheed Martin, and then had some dividends come in from Abbvie, which was right around $1,336 total. And then Stag, and those rolled into more Abbvie. I did not trip my November Abbvie payment, and I regretted it because they raised the dividend, and they raised it 10%, which is pretty significant when you're a 5% payer to begin with. I think right now my yield on cost for this position is right around 6.1%. Which is absolutely wild to be collecting that over the course of a year. It's well over 1% a quarter, which is just phenomenal to me. As you can see, I mean, this is a huge position and cornerstone of my portfolio. I can't wait for this to keep compounding up. It's pretty amazing that this purchase alone added another like $80 worth of income for the next year, almost $80. So that's pretty wild. I did do a deposit. I transferred over $3,500 and did a pretty big buy, in my opinion. I bought LMT. I bought just over 10 shares. This earns about $10 a share in passive income per year at its current rate, and it's just underpriced. They're landing stuff on Mars. They're doing all kinds of work right now. They've got a massive backlog in the billions. They're not going anywhere. They're going to be a cornerstone position in this portfolio eventually, but I am going to be building it up over time. You'll probably see some more massive buys in this over the course of the next year to 2 years time frame. But this particular purchase added a pretty significant amount to the passive income, which I will kind of show you the forward projection for that in just a moment as well. Then we have some more dividends rolling in. Caterpillar, Costco. I'll be rolling those into a buy the end of this week, but it will be a smaller buy. So those were the trades. So that's how we got that $9,000 total for the week, is both by earned dividends and then putting more money in, and then the market gain. All of that kind of rolled in. So as you can see, consumer was pushing up a fair bit. There's a lot of red this week across the portfolio here. Almost everything in consumer except for Altria and Home Depot and Costco. Everything else is just red. It's pretty brutal, but that's just how it is. When you have a portfolio that's structured like this, Joseph Carlson made this kind of template that I use, and he's updated his. I should do that. I should add the emojis and stuff to each of the categories because it's just fun. It's adding additional flavor to the portfolio. But when you own all the many of the different sectors of the stock market, not everything's going to be green every single week, and you're going to have a lot of fluctuation between each week. And you just got to hold for the long term. If you're buying stocks that you've got good conviction on, then you're going to be the growth, and you're going to see some stocks go up and some stocks go down. But ultimately, you're going to compound your dividends. You're going to keep growing and keep building the more consistent you are with your investing. So as you can see, Abbvie was up just a tiny bit, and it, obviously outweighs everything in these categories. Eventually, I am going to bring some of these other positions up, but right now, Abbvie was my top pick to get that sweet dividend, and boy, was I glad that I did that, because last year, building up that position, what did it pay off? When you get a 10% raise on a stock's dividend, and it's a stock that's $100,000, it's just a phenomenal feeling. And also, Warren Buffett bought into the stock, justifying my stock purchases. I don't pick them because these guys picked them. They picked them after me, technically. So it just makes me feel really good about the position overall. Finance actually had a really good week, and I suspect that finance is going to have some good weeks coming forward in the next couple months, as well as stimulus packages start rolling out, and more and more money gets out into people's hands. Banks are just going to do good. There's a lot less worry about the mortgage collapse for 2021 now that they've said that landlords are going to be getting some funds, and tenants are going to be able to pay their rent, things like that. It's just going to be very impactful. Hopefully we can see some more unemployment number decreases over the next few months and see things kind of get back to normal. I am going to try to be putting a little bit more into finance. I want to keep it rolling. AT&T ended in the green this week. I see a lot of people selling their AT&T stock right now, and I'm absolutely loving HBO Max. I've enjoyed several different shows on it. I watched The Flight Attendant while my mom was visiting through December and January for Christmas. We watched that entire show together, and we're laughing our ass off at how funny it was. But all in all, I'm just holding AT&T. I don't plan to add much to Verizon. I might add a little bit more. As you can see, I have it weighted at 85% just because I like my position in T where it is right now. I did add a little bit in December, but that was only to raise the dividend up to about $777 this year. I don't expect them to do any massive raises of the dividend or anything. I do expect them to try to get their debt position under control a little bit over the next couple years. Tech ended up down a little bit. Apple took a pretty big hit. HMI went up 10% this week, so it really offset. Even if you're the top dog in the stock market and you're Apple, you can't have every single week be a green week. You do have to have some little fluctuations and pullback, and there's going to be shifts in pension funds and money moving all around all the time. They did have an amazing, absolutely amazing quarter, and their earnings were phenomenal. I was tempted to sell Apple just to roll it into another position, and the HMI position would have been phenomenal for me to do that in, because if you look over this position, I've not had it that long, and it's not a dividend payer. This is a strictly growth play, and it's already up a pretty significant amount. This is a money weighted average return of 32.22%, but in all reality, it's actually only about a 25% return. It's phenomenal though to have that in just over 2 months. I do kind of wish I had sold Apple and thrown it in that, but I still have pretty high conviction for Apple, and I think they're just going to be a great cornerstone to hold likely the rest of my life. I do hold Apple through the funds that we have in both my 401k and my wife's 401k as well. We hold a pretty significant portion of Apple and Amazon, Facebook and Microsoft all in there. So we hold a lot of tech stocks in our 401k plans. Mine is exclusively pretty much tech stocks. It's kind of funny the way that worked out, but I love it. Don't have any intent on changing it, so I'm gonna leave it the way it is for at least the next probably 20 years. I will probably switch it around when I get a little bit closer to retirement, just to get a little bit more security in case we do need to pull out a little bit of funds once we're actually retired. But the goal with this portfolio is to make it so we don't ever have to worry about selling stock. Just collect the dividends and pay your bills with dividends and do the things that make you happy in life. Industrials, I'm definitely loving my industrials. LMT is down still. It's, down $47 with a portfolio like mine. I didn't have a lot in this stock, so its money weighted average return is down pretty significantly. This is going to be in the green as soon as they pay their next set of dividends, which I believe is next month. So just looking at that, that's absolutely fine. Across the week, we were actually down still a little bit with LMT. I realized that was on quarterly, but all in all, industrials is still down a little bit. I do want to build this up. I'm happy with my 3M position, but I do want to build up CAT. I want to build up Raytheon, and I want to build up some more in UPS, because I don't think UPS is going anywhere anytime soon, and their phenomenal year they had the past year, and I think it's going to be a phenomenal year for 2021 as well. Utilities, I just don't know what to say about VST at this point. I tell it to calm down, but every time I tell it to calm down, the stock just keeps going up, guys. If we look at 1 year on this stock, the stock is up 22% money weighted average return for me. This is a utility stock. These aren't supposed to be given tech returns of 21%. 7% of that is just this week. Almost $2,000 in gain on a utility stock is wild. The earnings call is coming up in a week. We got an absolutely phenomenal time. I'm going to talk about this even more once the news is out. Absolutely wild. I do plan on adding a little bit to these as soon as I've got a little bit more funding, maybe the end of March. I might add a couple $1,000s to several of these to build up the positions overall. I think utilities are just super important, and especially the ones that are transitioning to green. I think they've got a huge runway to compound and build up over the next 10 to 12 years before I plan on my wife and I fully retiring. The goal is to get to 50, decide if we want to do another year or two, and then just retire. So I think utilities will have a solid time over the next 12 years to build up. Real estate ended up a little bit in the green, only off the back of ABR. ABR has just been a stellar cornerstone. I've had this for quite a while now. Look at all-time returns on it. You're looking at 72% money weighted average return. This is just phenomenal. Even when REITs are super beat up, this company has just been a beacon. Joseph Carlson is a huge fan of Store Capital, and we watched a bunch of videos he had linked in Discord, and I was sold. I bought into Store Capital in both my IRA and in this dividend portfolio. I plan on holding this company for a long time. Just amazing returns, as you can see there. On the week, they were down a tiny bit, and that's okay. We're going to get stronger and stronger as the economy bounces back. For energy ended up going up quite significantly for this week. If you look at S&P was up for China Petrol, Chevron was up, Valero was up, EPD came down a little bit, but EPD had a massive run over the past couple months. I expect them to kind of be a balanced play and maybe grow 10 to 12% this year, but they pay a 10% dividend, and you can't expect 20-30% growth rates off of something that's paying you 10%. This K form is coming in this month, I believe. The end of March I should have it and get that off to the accountant and get my taxes filed. You do have to be aware that you will get a special tax form from these guys, and you'll be paying a pretty hefty penny. You'll pay your regular marginal tax rate, I believe, on that one. Monthly dividend stocks. Again, we have a PIMCO, Dynamic Income Fund, BST, and Stag. These two are down this week, but overall, portfolio is doing pretty solid. I'm very happy with the 1 week gains. If it could just consistently go up like this for the next few months, I'd be very happy. At one point on Friday, I debated filming just because the portfolio was up over $500,000 on Friday, but it did drop back down. So this goal of getting this thing up over that 500,000 mark it's getting there slowly but surely. Whether I have to add money to it, or the dividends add money to it, or the market gains keep going up, you got so many things working in your favor when you're building something like this and you're consistent. I do want to thank everybody for watching. Again, the music tonight was brought to us by Harris Heller and Stream Beats, and I'm going to leave you with that little bit of wisdom. Be consistent, keep investing when you can, what you can, and if you don't know what to buy, just buy index funds. VU, VYM, SPY-G, any of those, they're very solid funds. As always, thank you for watching. This is Dividendago signing out for February 20th. Alright, just kidding. I have a little bit extra to add. Someone had requested that I show the 1 year mark of the portfolio and what it looks like, what the gains were, what the dividends collected are, and we're going to just scroll real quick through the portfolio so that everyone can see what it looks like. Again, this is 1 year from February 20th back of 2021. So this is what it looks like. You can see each sector, and I'm just going to scroll through relatively quick. You can slow down the video if you want. And it's been a pretty interesting year, to say the least. I've definitely made a couple plays. There were some things that did get sold. As you can see with finance, there was a pretty massive dip there in May. That's because I had a Wells Fargo position I sold and then redistributed into other stocks. That's why that dip is there on finance. AT&T 1 year is just squeaking by, almost green. It wants to be green. It really does. Showing the last couple in here. And monthly stocks, they are still down pretty significantly just due to PIMCO being still down. But BST was a rock star for last year. I wish I had put more money in that. Alright guys, I'm actually signing off now. Have a great night. Thank you for watching.